Hey guys, what's happening? It's good to be back for another week of a live stream. I just got to tell you guys, man, the honey business is going crazy. It's a lot of work, but it is really rewarding. I got my honey. Oops, there we go. My honey shirt on. Look at that logo and everything. Was out delivering honey today and stopped by a grocery store here in town, and it's actually a pretty big grocery store. And just talked to them for a little bit, and lo and behold, I'm going to deliver some honey there tomorrow. So picked up a new grocery store today, which is really awesome. And so I deliver honey about once a month, and that it's not a lot of time, but it's just really rewarding. I think the biggest time investment in this whole thing is actually the processing, getting everything to work the way it's supposed to. And I knew I brought a tea in here. I just couldn't remember where it went, but here it is, half and half iced tea. It's funny. I go into a restaurant now and I'll just order half and half, and they know what I'm talking about. They don't bring me like creamer, coffee creamer. They bring me half and half iced tea. So, but yeah, it's been a great day, man. I had bottled, I had sold a lot of honey yesterday, and so I was going to deliver it today. Bottled everything, or I sold everything that I had. I even had to bottle some more last night. So I got on the road and sold the honey today. And lo and behold, I have more orders now, and they got to be delivered tomorrow. So I had to go and bottle some more honey tonight. And so I was kind of stretching it to get here to be with you guys, but I'm glad I'm here. And I just thought tonight we would just talk about stocks. Let's just talk about stocks. Anything that's on your mind, I want to hear about. What are you buying? Is there something you're selling? And I know that the last couple of days have been a little bit of a drag, but I think last week we were pretty flat overall. I mean, the stock market went way up in the beginning of the week and way down at the end of the week. So, but overall, it was kind of flat. So I'm good with that. But today it went down again. We'll look at the return. Actually, let's just do that now. Why not? Woo! Let's talk stocks. The Wealth Circuit Investing Hour. That looks really professional, doesn't it? All right, let's see here. We've got, this is the chart from, this is a year-to-date chart where I compare the portfolio's return to the indices that you see on here, the Dow Jones, the S&P 500, Russell 2000, and NASDAQ. NASDAQ is still beating us, even though they've had a little bit of a rough couple of weeks. But, they're not beating us by a whole lot. You can see the portfolio is at 17.38%. Now, this was as of 11/14 because the Monday stuff doesn't get, generated until after this call. So that's why I always use the Friday stuff on here. S&P was up 15.77. So we're about 161 basis points ahead of the S&P 500 year to date through the end of last week. NASDAQ, we're about 186 basis points behind the NASDAQ. And then Dow Jones, we're 496 basis points ahead of the Dow and 906 basis points ahead of the Russell 2000. So, and now on a risk-adjusted basis, we are beating all of them. And the risk-adjusted basis, I think it's called a Sortino ratio or something like that. There's a Sharpe ratio as well. And they're both pretty much the same. But so this calculates what is the return per volatility. And so if you're like me and you're looking for a portfolio that's not volatile but is going to be competitive, then this is a good way to measure it. So we're ahead of all the indices on a risk-adjusted basis. So, all right, that's cool. Just thought, I know I said I wasn't going to share this unless something changed, and something did change this week. The Wealth Circuit investing portfolio is now on top. We are above the NASDAQ. We're above Dow Jones. And this is as of August 11th. So you can see here, that's the date of here. This is November the 17th. So we're talking about 3 months and a week since we started this portfolio. Well, not since we started the portfolio, since we started comparing our portfolio to the indices and to a Chat GPT and Gemini portfolio. You can see that the Gemini portfolio just really is just not performing well at all. And then Chat GPT is about break even. All of the other indices are doing pretty well, but the West Circuit investing portfolio has done well in the last 3 months and 1 week. So that's good to see. So yeah, I said I wouldn't share anymore until things changed, and they changed. We jumped above the NASDAQ, or was it the Dow Jones? I can't remember, but it was one of the two. All right. Let's see what you guys are up to this week. El Dynamico, good to see you, my friend. You are not late. You are actually a bit early. So it's good to have you, man. Michael Swami's in the house. Good morning to those living abroad, east or west. Pat's got a new handle this week. I'm not sure how that happens, but it's probably some Google thing or YouTube thing. But good evening, Pat, to you. Oh, you're back in the cold weather for a few weeks. Probably for the holidays, I guess. So yeah, that kind of stinks. But hopefully you're gonna be with family and stuff, and you'll be all warm on the inside. So okay, I won't do that again. Steve, good to see you, my friend. Yeah, you got a little different handle tonight too. I think they may have changed that in the algorithm somehow. So yeah, I don't even know what mine is. My thoughts on UTG for this old retired guy. Let me write that down. Old retired. Oh, sorry, UTG. We'll take a look at it. I think that's the utility thing. But yeah, let's take a look at it. I've devised a ranking system for Kevin, and I think that's supposed to say stocks. Stocks are ranked 1B, 2Bs, 3Bs, or a queen bee. That's not a bad idea. That's not a bad idea. I might have to put that into play. That's a good idea, Steve. I like it. 1B, 2B, 3B, queen bee. I'm going to add that in somehow. I'm not exactly sure how, but I'm going to incorporate that in. You got my wheels churning now. That's good. Oh yeah. Either way, good evening and greetings from Sacramento. Good evening, El Dynamico. What's this? Were you on for Rush's shoe last night? I saw part of Russ's show last night, but I did not see anything about a shoe. So I'm not really sure. You guys may have to enlighten me or just let it go. Hassan, you're in the house. Good to see you, my friend. Oh, that's great, Michael. I appreciate that, my friend. I'll send you the check. That's great. Pat says he is the old guy in the group and he's living off some of his dividends, but still reinvest and like looking at new stocks. That's good. So maybe he's responding to. Anyway, I must have lost that train of thought. Let's see. Oh, Billy is in the house. Billy, you got the handle thing going on too. I guess everybody does. So, but it's good to see you, man. It's good to see you. And you are good morning for sure. And it is good evening for me. Yeah, Billy White Shoes Johnson. I love it. That is a great. I wish I'd thought of that. Billy White Shoes Johnson. That is true. Used to be a football player, wide receiver. I think he played for the Houston Oilers, if my memory is correct. And that is why Mr. Swami brings that up. I'm going to move. I've got a tea glass from earlier today. I'm going to move that over here because I keep reaching for it and it's old. So I'm going to keep the new one right here. Yeah, there used to be some jokes about Billy White Shoes Johnson when I was growing up, but I can't remember what they are. Wealth Circuit Honey. I like it. Actually, I call it Dixie Sweet. Dixie Sweet. And the reason is my aunt, who passed away during COVID, was just a real special lady. And she, her name was Donis, and she told us on multiple occasions that she wished her mother would have named her Dixie. So I named this honey business with her in mind. And so Dixie is not about south of the Mason-Dixon line. It is about her. So anyway, it's a cool story. So yeah, Dixie Sweet Honey. I can't have everything called Wealth Circuit. Let's see, El Dynamico. Maybe we can get some of that honey over here to the Sacramento area. Man, that is a long way to haul honey, buddy. I volunteered to be your point of contact. What do you think? Think about it. Okay, yeah, I'll think about it. But man, I'll tell you what, honey is heavy. It actually weighs 12 pounds per gallon, which, water weighs 8 pounds per gallon. So it's much more dense than water. So shipping honey really doesn't make a whole lot of sense unless, you're just, making tons of it and need the broader market. But plus, part of my marketing is about being local, and there's some health benefits for local honey. But if Alabama honey is sold in California, it's not really local anymore. So it's basically then just a sweetener, which is a great sweetener. It tastes so good. But yeah, so I'm not sure if I will venture out more than maybe 50, 100 miles from where I am. Trying to think of the furthest away. Actually, I did have a store. I don't have it anymore. That was 2 hours from here, but it was like back roads. It's not like it was 60 miles an hour the whole way. It was like 30, 40 miles an hour. So, but it may have been 80 miles. So that's pretty good distance. But I would haul it there. I didn't ship it. So unless maybe El Dynamico, I could get in my truck and, drive out to Sacramento and bring a case of honey. I don't think it'd pay for the gas, but it would be a fun trip. Pat's older than Gen X. Yeah, Gen X is not that old, if my memory's right. He is, I want to say he's in the upper 40s, low 50s, something like that. He's younger than I am, if my memory's right. Oh, Pat, you're young, man. 70s is the new 30. All right. Hey, Fast Eddie, what's happening? It's good to see you, my friend. Oh, good, Billy. That's not a bad move. I was looking at Visa today in my spreadsheet, my handy dandy spreadsheet. I got to find a good name for that. I call it my model, but it doesn't. It's not very memorable. So I have to come up. Maybe I could call it the Wealth Circuit model or something. I don't know. Let's see. But yeah, V is not a bad idea. We'll take a look at them here in a little bit because I think they are looking pretty attractive. Hassan added both Visa and MasterCard last week. He's looking at Clorox. Interesting. Yeah, it's looking cheap. So I have some thoughts on Clorox, and they may be dated. So I will share them, and you just, as they say, take them with a grain of salt. Okay, it's been a while since I have really dived into Clorox, but I had some pretty strong thoughts when I did. El Dynamico, for the past couple of weeks, I've been loading up on OBDC. OBDC. I'm down 10%, but hey, that's a good thing in the long run. Yeah. Yeah. I mean, it makes us feel better, when we say we can buy it cheaper. I had this discussion, I think, with Ryan at one time. It's been a couple of years ago. He probably won't remember it, but we had a discussion online. I mean, like not face to face, but just typing. That why would we want our stocks to go down? And I understand we get to buy it cheaper if we're doing dollar cost averaging, so that kind of makes sense. But I would much rather buy a stock and it go up, and I buy it again, and it go up, and I buy it again, and go up, and I buy it again. That's kind of what happened to Parker Hannifin. It was just crazy. But at the end of the day, I mean, if we like a stock and we like it at a certain price, let's say we like it at $20 and it drops to 15, we gotta like it more at 15 unless some new news has come out. So it is good to get it at a cheaper price. So I certainly get that aspect of it. And I've got one now we'll talk about Cormedics, CRMD, that took a bath today. I'm not really sure why. So maybe Rust here, maybe my buddy Nathan has some ideas on Cormedics. If you do, let me know, man. If I made you sell one of your stocks tomorrow morning, which one would it be? That's a good question. I've been having some thoughts about something, and maybe I'll share that. But if I had to sell a stock, what would it be? I'll take a look at my portfolio and see. There's nothing that I'm sitting here going, man, I cannot wait to sell this stock. I've got some pretty good stocks in the portfolio, but there are some that I think may need to be trimmed for sure. Single stock. Got it. Yep. Oh yeah. Thanks, Nathan. Yeah, it is going really well. I'm enjoying it, and I'm getting to meet new people. I met the store manager. It's funny. I went in and I said, "Hey, I've got this honey business, and I want to sell some honey." And he goes, "You will never believe that a lady came in this morning wanting local honey," and he said, "I don't have any." So I said, "Well, I can help you with that." And he was like, "Oh, that's great. I'll give you this shelf space. You can, he said, can you bring me some honey tomorrow?" I said, "Yeah, I can do that." So I was out there bottling that earlier. So, but, so it's just really funny how things work like that. And there are 5 of those stores, that chain. There's 5 stores of that chain within driving distance of me. So that means I'm going to be hitting the other ones as well, because then I'll say, "Hey, your buddy over at the other one, you don't want him to have something you don't have, right?" We'll see how that works. I don't know. I'm not a salesman, never been a salesman, but I thought, it's never too old for an old dog to learn some new tricks. So I've just found that being honest and open and friendly with people is a good start. Ed Sullivan is a little before my time, Michael. I remember some videos of Elvis being on the Ed Sullivan show, but I don't know. Maybe I just am not cultured enough. But yeah, that was if my memory's right, that was part of the joke. And I'll share the joke. It was, and I'm going to butcher it, but this is kind of what I remember of it. There's a apartment building get caught on fire, and the lady wanted them to save her baby, and Billy White Shoes Johnson comes by and he says, "I'll catch your baby." So he caught the baby, she throws him off, and he caught the baby. And everybody cheered, and he started doing his dance, and then spiked the like he would the football at the end. That's awful. Why do you guys let me tell that? That's awful. YouTube did an update for live streams only, showing exact YouTube names and not nicknames to avoid scammers. Okay. Well, that is awesome. So you are at Rust Moments. I wonder, I should see what mine is. It's probably at Kevin Burgess because I'm not very creative. So, oh, thanks, Michael. Yeah, that's a Dixie Sweet is, Honey is sweet, but her name was Dixie and she was sweet as well. So that's where we get it. Oh man, El Dynamico, you got to leave me. That's okay, man. I appreciate you dropping by. Have a good evening, my friend, and hopefully everything goes well for you in the market. So have a great evening. Your last name is Scrambled. So is it Samwami? Samami? I don't know. I'm not following that. All right, here we go. Some real thoughts here. My only guess for Cormetics going down are the shorts. 22% of all shares are short, but the 3.4 forward seems so good on a risk to reward. How much lower can it go? Yeah, I agree with that. I mean, I bought how many? I bought some. I put out on the Discord how many shares I bought today. I think it was 500 or 700. Let me see. Buy and sell call outs. Oh, and if you're not part of the Discord, join it. It's in the notes to the to this broadcast. So yeah, it was 700. I bought 700 shares of Cormetics today, and it brought my average down. I forget to somewhere around 1070 or something like that. And if it goes down, I think it even closed below 10. No, like 9.99 or something like that. Sorry, I should know all of this, but I've been pumping honey, man. I've been pumping the honey. That's not it. Let's go to this one. Here, I'll let you guys see the screen. Dun, 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 dun. There we go. So let's go to Yahoo. Yeah, we were down 0.68 today. So let's see what the rest of the market did. This will be live action. I haven't even seen what the market did today. So the S&P was down at whoops, where'd that go? The S&P was down 0.92%. The NASDAQ was down 0.84%. The Dow was down, wow, this is wild, 1.18%. That's no bueno. No bueno, mi amigo. But in the meanwhile, back at the ranch, let's see what Cormetics did. CRMD night. Oh, sorry, I'm in the wrong one. Can you imagine that? Who does that? All right, we're back now. Here we go. Cormetics, 998. So yeah, it closed to 998. That is not good. Actually, it is good because I am going to add some more. I wanted to get it up as a larger part of the portfolio anyway. So it just gives me that opportunity, like we said earlier. Let's see. Yeah, it made me cringe too, man. But the things you hear when you're like 3 or 4 years old that stick with you the rest of your life. Oh, wow, that's cool. You met Billy White Shoes Johnson. That is awesome. That's great. I got to meet, you remember a wide receiver that played for the Miami Dolphins back in the early 70s? His name was Mercury Morris. I got to actually have lunch with him one day, and he is a super guy as well. So had a great time. Oh, he's a Texans ambassador. That's good to know. Yeah. How much lower can it go? He said the same thing about Enron. That is right, man. All right. Yeah, then I may have the wrong guy. This was a wide receiver for the Miami Dolphins. Maybe I've got his name mixed up with somebody else. I'll have to look it up. I'll um, I'll put a picture out in the um, Discord. I'll put a picture out in the Discord. All right, so let's look at some stocks, guys. What do you say? I think it's time. We'll go to Simply Safe. I will bring you guys along for the journey. Uh, yes, that's who it is, Michael. Paul Warfield. That's who I met. That's who I had lunch with. He had his. It was at a. It was back when I lived in Northeast Ohio, and I got tickets to go through work. I got tickets to go to a because it was near Canton, is where we were. So Canton, Ohio, is the NFL Hall of Fame. It was Hall of Fame weekend, and Paul Warfield was at my lunch table, had his gold jacket on, and we chatted. And actually, he gave me his phone number as well, but I never did call him. I should have, but he never called me either. So. But yeah, I wonder if it still works. I still have it in my phone. So how many folks have Paul Warfield's number in their phone, huh? Yeah, the '70s GOAT wide receiver. Yeah, he was really good, and so yeah, that was a good time. All right, so let's do something for Mr. Pat here. Pat, you are so consistent, and yeah, this is the Utility Income Fund. So he wants to take a look at that for the old guys, and I include myself in that. The dividend safety is an 80, which is fantastic. It is an utilities fund, but and then dividend yields around 6.54, so that's pretty good. Dividend growth of 5%, that's not bad either. See if there's anything else here that. Oh, back in August they upped the dividend score from 70 to 80, so that's fantastic. Net asset value is let's see, what is the price of this thing? It's running about $37, and the net asset value is around believe it or not, $37. That's crazy. It's funny how that works. Dividend growth the last 5 years is pretty slow, but here recently it's been higher. Wonder what component of that it is. Looks like they don't raise it, but like every 6 quarters or something. So I bet the next quarter, not December, but I bet. It's by month. Never mind. Yeah, it's monthly. So every 6 months they raise it. So it looks like we're going to get a raise, Pat, in January 26th. So be looking for that. Dividend yield. And it's actually at a low 5-year dividend yield. So we got that going for us. Total returns annualized. UTG is at 16.8 over the last 12 months. But the key thing here, Pat, and this is what I'm looking at here. The key thing here is that UTG has outperformed the equity closed-end funds, other equity closed-end funds, in every period, the 12-month period, the 3-year period. Oh, not in the 5-year. Sorry about that. But in the 10-year and in the 20-year. So sounds like it's a pretty decent thing. And, if you're needing the income, I don't see anything wrong with the Reeves Utility Income Fund. Looks good to me. That's my honest opinion. All right, Visa. I promised somebody I would look at Visa. I forget who it was. Let's do this. Oh, looky there. Huh. Funny how that happens. All right, let's look at Visa. Visa is, you can see all the stocks here in my watch list, but yeah, Visa is actually the 45th stock in the spreadsheet. But the cool thing is that I'm showing it with a 13% potential return. The analysts are saying 22%. It is a wide moat. It is a bit overvalued, but that's I consider 10% one way or the other kind of fair value, because it's hard to really pinpoint a one number for a fair value. I think of it more in a range, being 10% above or below. So I would say it's on the high end of fair value. How does that sound? It's got a 30% return on invested capital, medium uncertainty, and a 99 dividend safety rating, and a payout ratio of only 21%. I should make this a little bigger. You guys can't see that. I can see it because I'm looking on my monitor, but you guys can't see that. Ta-da! There we go. Is that better? So that's kind of at a glance. This is part of my spreadsheet. So it just gives me at a glance all the cool stuff from Morningstar, from Simply Safe Dividends, and from Yahoo now for the analyst information. So it's good stuff. So yeah, I think Visa is looking good. And so if you're adding Visa, I would say more power to you. You guys ever watch the Andy Griffith Show? That was one of my favorite episodes. Was when the Darlings came to town. The very first episode they ever came to town, and their radiator was overheating, and Andy was the sheriff. He came up and he was like, "Hey, this." So they were taking water out of this trough and using their hat and pouring it into the radiator. Andy says, this is really supposed to be for horses. That's what the sign says. And, Paul Darling looks around and he goes, well, he said, I don't see any, but if I see one, I'll give him the right of way. Anyway, it was funny. He does a lot better than I do. All right, so Clorox. Somebody is buying Clorox. I don't even think I have Clorox in my spreadsheet, so we'll just come back to Simply Safe. Simply Safe. Clorox. CLX. Okay, it's a 70 dividend safety, about almost a 5% yield, so that is getting pretty high. They got a triple B plus credit rating, so that's good. Let's take a look at some of their financials. Man, it started in 1913. That's a long time ago. That's a couple of years before I was born. All right, Clorox, 73% payout ratio, a little on the high side for me. Forward ratio is a 76, so that means that they are expecting earnings to drop. We'll take a look at that here in a second. Dividend streak's 53 years. That's a pretty good long time. It is less than I've been alive, though, so you get that. All right, 1.6% growth in the last year, 2.7% in the last 5 years, 5.1 in the last 10. So you can see here the chart on dividend growth is kind of flattening out a bit. There was some time between, let's say, 2016 and 20 that was pretty high, 21, but then it flattened out. Dividend growth streak's 48 years. Man, it's almost $5 a share is the dividend. That's a lot. Because the price is only $101. It's like having a savings account, man. All right, let's take a look at some of these financial ratios. So yeah, in 22 they were at 114% payout ratio. Then it came down to 63. Now it's back to 73, and it's going to 76 over the next 12 months. That's a little. And even Simply Safe says, "Hey, 70s are their preference for consumer staples. I like 60 or below." Free cash flow payout ratio is nearing 100%. So that's not a great thing. Yeah, see how these earnings per share pretty volatile, and it looks like it is going down to 651. Free cash flow is going down. Sales are going down. Shares outstanding are pretty consistent. Return on invested capital, though, looks pretty good. It's in the mid-20s. So that's not a bad metric. Net debt, oh, wow. Debt to capital. They've got 96% debt. Yet their interest coverage is 11.2. I'm not really understanding that. But their net debt to capital, that means, what that means is how much of their total capitalization, which would be their liabilities and equity, how much of that is debt? How much, and if you think about it, the liabilities and equity also equals the assets. So what percentage of the assets are funded by equity versus debt? And in this particular case, 96% of their assets are funded by debt. And I would have to dig into the financials to see. This can get a little bit out of whack if they're buying back a lot of shares, but I didn't see them buying back shares here. So, yeah, that's a bit scary to me. I don't know if it scares anybody else, but the net debt to capital is pretty high for Clorox. But here's the thing. When I was looking at Clorox, it was back, 2021, maybe 2021, early 22, something. It's been a few years ago. But I listened to some of the conference call with the CEO, and at the time, that CEO had all of this consultant lingo, but there was this no meat behind it, and I was just like, you know what? I just can't see investing in something that I can't understand what the person's trying to tell me. So I just I never even bought it. I didn't even buy into Clorox. But I mean, at the end of the day, everything is worth something. Unless it is going bankrupt, everything is worth something. And the question is Clorox a good buy right now? So let's take a look really quickly at the fair value according to Morningstar. You guys can see it right here. Where is it? There it is. They're saying the fair value is 163. It is at a 36% discount. So you got that going for you. So I mean, it might be worthwhile looking at it. It just seemed to be that their product lines, they had a lot of great brands. They had Glad plastic, like garbage bags and stuff like that. And then they had, Clorox, and then they had, but it just seems so disparate. It's not like they had a clear strategy around, we're going to do this and make money with it, right? It's like they were just wanting to buy everything on the grocery store shelves so that they could somehow get some synergies for distribution. I just don't really, I couldn't figure out their strategy. So maybe others can't either. But, they do have a wide economic moat. So, it might be worth looking into. I don't know. I mean, everything's worth something. Unless it's going bankrupt, and then it's worth nothing. So, all right. Those are my thoughts on Clorox. Who wanted to look at OBDC? I'm not sure, but let's take a look. It's only fun if we get to look at this stuff, right? OBDC. Oh, Blue Owl. Yeah, Blue Owl Capital. It always throws me for a loop because it's like no Blue Owl there. It's like Owl Blue. And I just don't ever remember that OBDC is Blue Owl Capital. So, I'm sure there's some reason for it. They probably renamed something, but all right. So their credit rating's triple B minus. That would be the lowest investment grade credit rating. They've got a 50. That is a borderline safe dividend safety score, but their dividend yield is 12.5%. And as long as it's not a yield trap, that's not a bad idea. If you're looking for a certain level of return, like I am, I target 8%. Just so happens we're in the 17% range or something like that this year. But some years it's going to be zero. So I need to make hay while the sun shines, as they say. But if you're looking for, a certain percentage, then, if you can get 12.5% and the share price value is not declining, it's not a bad thought. Let's take a look at what the share price has done. OBDC, Blue Owl Capital. Loading chart. Let's look at 5 years. Yeah, what I'm seeing is, back in 22, it was low. It was up around, $15 back in 21, 22. Then it dropped down into the $10 range. Then it came back, and then it got up to a whopping $16.76. And now it's back to $11.90. So I don't know. It's hard for me to justify getting a 12.5% return on dividends when I'm giving more than that back. I mean, if you look at this, that's 13% down over the last 5 years. So, I mean, it's not a true yield trap, but it is giving money back over a 5-year period. Let's see what the 1 year says. Yeah, it's giving 20% back. So if I bought it a year ago today, I would have gotten 12.5% in dividends, and I would have given 20. Actually, it'd be less than that because the price was higher. But just for sake of argument, I would have gotten 12.5% in dividend yield, and I would have given up 20% in capital growth. So I would have taken a capital loss for 20%. So that's not a win-win to me. So. Anyway, those are my thoughts on Blue Owl. We talked about Cormetics already. I'm going to save that other one for a few minutes here just to see what you guys have going on. I mean, I have all this on my screen. It's just hard to keep track of everything. So let's see. I forget where I was. Wow, I got really behind, didn't I? Michael says he can't remember what he had for lunch, but he can remember 70s receivers. That's and that's even bad because I can't remember what I had for lunch, and I thought Mercury Morris was the guy, so I can't even remember the receivers. So, coolest person I talked to is the Coke CEO. Oh, that's awesome, Nathan. That's good to hear. Yeah, I'm gonna have to get out to one of those Billy Graham conference things. That'd be kind of fun. I keep talking about going places. I'm going to go to Vegas and see Ryan sometime. I'm going to sneak up to Chicago and see if I can't meet up with Russ. That would be kind of fun, just to kind of hang out for a little while. It's kind of hard to justify just to go, but, I mean, hey, I'm not getting any younger, right? Michael's wondering about Hessam. Is it a good value? Thinking of selling Enbridge and buying Hessam. I think it is, Michael. Let me show you what I got here. Ooh, that's not right. Here, how about that one? Let's go to this. I'm showing it as actually as the number 2 rated stock in the portfolio. Why? It is, and I'm not alone. I'm showing it with a 24% potential return over the next 12 months. Now, remember, what's the dividend yield now? 9.3%. So 9.3% of that 24% is dividend yield, but analysts are also saying 23%. So we're right there. I mean, I'm right there with the analysts. Now check out Cormetics. Cormetics, I'm saying 35%, and the analysts are saying 90%. So I would really question my numbers if I thought it was 90%. But I do think that there is some potential gain there. But anyway, the question was about Hessam. I think Hessam is a good value at this point. I think the future, and I think the reason the stock price is down is that there's some uncertainty about the future, and that is, what is Chevron going to do with the Bakken region assets? Are they going to utilize them the same way that Hess Petroleum did, or are they going to, curtail those? What's the approach? But at the end of the day, there's still energy there, and it needs to flow. So whether it flows now or whether it flows in 2 years or 3 years, I think it's not a bad deal. And Hessam is well suited to pay the dividends. Now, that could change as contracts get renegotiated over the next 3 years. But as of right now, I don't see any reason to get out. And it's 2.5%, around 2.76% of my portfolio. So it's at normal weight for me. So I'm not looking to add any. But if I were looking for some dividend income, that's kind of where I would go for it, Michael. Those are my thoughts. Yeah, Lynn Swan was good. That one I remember as well. Dresh, how you doing, man? It's good to see you. You like MasterCard better than Visa right now? Let me see where let's do this. I want to see where they fall in the, because I may agree with you. Hold on just a second. I want to pull this up. Visa. Yeah, so MasterCard I have is the 35th rated stock in my portfolio, and not in portfolio, in my spreadsheet, and Visa is 45th. So they're about 10 difference, but MasterCard is rated higher in my spreadsheet than Visa, and it has to do with potential annual return, has to do with really just that. But part of that's related to percentage of fair value and stuff like that. I do have a formula that I look at for all of that. But yeah, I agree with you, Dresh. I think MasterCard is the better deal of the two, but I don't think you can go wrong really with either one. I own Visa, and I own it because at the time it was really inexpensive. Yeah, I mean, look at that. It was 23% ago. So that's not a bad deal. There we go. All right, let me come back to you guys here. But yeah, I agree with you, Dresh. I think that's a good thought. Dividend Data channel has a lot of content on Hessam. I think it's a decent value right now. High and growing dividend with some potential for an acquisition. Yeah, I think it's, I don't know if my thoughts on that is it is a much higher potential to be reacquired by Chevron than it would be to be acquired, I think, by someone else. But just because of the way the contracts are structured, that Chevron is really its only customer. I think there may be like $100 that comes from somebody else, but 99% of their revenue comes from Chevron. It was like that also with Hess Petroleum, and but I think Chevron probably wants that back in the fold. So I think that there is a potential for acquisition, but I would really call it a reacquisition. I don't think that there's really anybody else interested in it because Chevron has so much control over those assets. Yeah, I agree with you, man. Clorox makes ranch dressing. They have, they just had such a disparity of products. And I'm just sitting there going, what is their focus? What are they focused on? What is their special sauce, right? What is it that they bring to the table? Why do all of these products in a portfolio make sense from a strategic competitive advantage perspective? I just could not get my head around it. So I don't know. HCA might be my new fave stock of all time from a financials point of view. What do you think? I don't know what I think. I'm trying to think of even what HCA is. So let's do this. Let's go to here. No. Here. There we go. HCA. HCA Healthcare. I'm not really familiar with this one. HCA Healthcare. Let's look at it from not a 1 day perspective, but a 5-year perspective. Oh, wow. It is really climbing. That's good to see. I may have to look into this and go to my handy dandy Simply Safe Dividends. It is unrated. That means that they just don't care. They don't cover it. Very small dividend yield. Triple B minus credit rating. That's not bad. It's just one notch above investment grade. They are growing it pretty well, though. 9.1 and 10.5% the last 10 years. I mean, the last 5 years. Wow, the payout ratio looks great. It's down in the 10% range. Earnings per share is up and to the right. They've been buying back a lot of shares. Return on invested capital is in the 20% range. Fantastic. Looks like they have very little. No. This net debt to capital looks weird. I'm not sure what's going on there. That would say it goes 92%, 96%, 0, 97%, 99%, 0. Yeah, I would need to look into that further. I don't know what that data pool is. And then interest coverage is only 5.28, so that's not extremely strong. So, but I mean, there's some cool things about it. I don't know. I'm just not that familiar with it, Nathan. Hopefully it's, let me see if, let's see if, what is this, Morningstar? Let's see if Morningstar covers it. And they do. It's a 2-star. That means that they believe that the fair value is around 368. It's trading at 472 at a 28% premium. They think it is actually overvalued at this point. So there's that. And, you know, Morningstar doesn't always get it right, but I do trust what they do because that is the basis of their program. Their program is about value investing. And if you don't know the value of something, you can't really determine what the value is to invest. So if they consistently get that completely wrong, then the whole foundation of Morningstar goes away. So, and that doesn't mean that they get it right all the time, but I think they do get it right a lot of the time. But, you know, you just have to keep an eye on it. But yeah, it looks to be overvalued according to Morningstar, right? Hey, Robin, it's good to see you, man. Favorite Andy Griffith episode was when Barney was trying to hypnosis on Otis. That was funny. That they had such great shows, man. I can actually quote some of the shows. It drives my wife nuts. She's like, "Oh, how do you remember that?" I was like, "I watched it when I was a kid, and I watch it a lot." So, hey, Triven, what's going on, man? Could take a look at SBAC. SBAC. SBA Communications Corp. Class A. Let me switch over here. According to Morningstar, it's trading at a 26% discount, so it's 4-star rated. It just means that it's below their fair value, which is a good place to start. And let's see what this has to say about it. SBAC. Ooh, 60 is a borderline safe dividend, 2.27% yield. They have been growing it pretty quickly, though. And again, triple B minus credit rating. So one notch above investment grade. So they're in towers, building antenna systems, infrastructure, wireless. Payout ratio looks great, around 33%. That is good to see. 13% growth, 26% year over year. Here's the truth. The truth is in the pudding. Let me find it. Yeah, so they're this uses an adjusted FFO ratio. Oh, it's a REIT. Okay, that's why. But I mean, regardless, but there are rules about what they can pay out, so it doesn't really hold as true. But here's what I wanted to show you is that the adjusted FFO payout ratio is climbing every year, so it is getting higher and higher percentage. So they're able to invest less and less back into the business, but it is a REIT, so they've got rules that they have to abide by. So I'm not sure that holds as much water as some of the non-REIT holdings. Their shares outstanding, they've been buying back shares. That's good. Sales are going up. Return on invested capital is up around 12%. That's pretty good for a REIT. So I think that looks good. Net debt to capital is 0. Interest coverage is 3 compared to 2, which is what Simply Safe says they would want them to be above. So, it looks fine to me, Triven. I don't see anything wrong with it. I don't know if it's going to grow dramatically, and you're getting a 2.27% yield. So if you're going to get, a yield of 2.27%, and they're trading at a discount, so you can look for some fair value recovery, and maybe that's what you're looking at. But they are growing their dividend pretty significantly too. So yeah, I mean, it looks pretty attractive. I think it's pretty good call, man. I like it. My favorite was when Barney lectured the prisoners on the rules of the rock. Yeah. That was so funny. Yeah, here are the rules. The first rule is obey all the rules. Don't write anything on the walls. It's hard to get it off. That's good stuff, man. Clorox's ERP upgrade is on track. So they must be, are they going to SAP maybe, Enterprise Resource Planning? That's typically where companies go to when they're struggling with getting the ERP on track. We used SAP when I was working, and it was great because everything is tied together, but it was a dog because everything's tied together. So it was tough. It was difficult, but we made it. Made it work. Huh. Steve says Clorox once owned a barbecue restaurant. Now, I could see that because they would have to clean the restaurant. Maybe they use some Clorox in the process. I don't know. But yeah, that's right. They own Kingsford Charcoal. Yeah, yeah, that's good, Dresh. I like it. Less concerned about charcoal and bleach mixing than bleach and ranch. Yeah, I would not want to eat that. I would not want to eat the bleach and ranch mixture. Let's see. Oh man, my buddy Russ. I don't know how'd that happen, man. Yeah, I think I told him that I was gonna try to sneak up to Chicago and see you sometime. I think that's what it was. TJX annual report and getting more familiar with the company. Okay. You know, my wife loves TJ Maxx, and I know they have more than just TJ Maxx, but she, if you buy some shares, she will be supporting your investment. Trust me on that one. Is FDS FactSet Data Research Systems in trouble? I'm not really even sure who that is. Let me see if I can find a ticker. FDS. Oh, maybe that is the ticker. FDS FactSet. I don't think so. Let me look at one more thing, then I'll bring you guys into the loop. Yeah, I mean, I don't see anything that causes me to think that. Here, let me show you what I'm looking at. So, by the way, Jax, good to see you. And I love the picture there. I mean, it's really small. I can barely see it, but I think it's my man, Jim Cramer. Sell. Anyway, here's Morningstar. Morningstar. It is fair value of 385. Is currently trading at 273. Let's see if there's anything cool. Bulls say FactSet's data feed and wealth management businesses represent strong growth opportunities, and the bears say that customer base of asset owners and asset managers could face pressures, and a drop in equity market could weigh on customer budgets. In addition, investment banks face pressure from soft deal activity. So I think they're, just maybe in trouble from a future growth perspective. But I mean, take a look at this. I mean, FactSet has got a 95 dividend safety rating. It's only a 1.6% dividend yield. It says it may be undervalued. It doesn't have a credit rating. Maybe it has no debt. I mean, 95 is pretty good. Look at that dividend growth, man. 5.8, 7.5. Let's see, 5.8 and 1.6. So, I mean, it's a decent stock. And if it is undervalued, yeah, I mean, it wouldn't be the top of my list, but it would definitely be worth looking at. I don't think they're in trouble. I don't see any reason, other than the stock price. But I don't see anything. I mean, look at this: 25% earnings payout ratio, as well as cash flow payout ratio. Earnings per share continually up and to the right. Free cash flow up and to the right. Sales are continuing to grow. Shares outstanding are pretty flat. Return on invested capital is in the 16% range. That's not terrible. And net debt to capital is only 36%. Interest coverage is 13.3. So I don't see anything that would cause me any concern on the financial side of FactSet. So are they in trouble? I don't know. I don't think so. I don't see anything that would cause me to think that they're in trouble. So, but anyway, nice picture. I don't know. I don't know if they reported or not. Yeah, I agree, Michael. I think Chevron is a much better benefactor than Hess. I agree. But I also think that Hess may want to bring them back into the fold and would want to do that at the best price possible, which means they would want to cause the business to slow down at Hess midstream in order to get it at a cheaper price. So I don't know. But I agree with what you're saying there. Am I familiar with many Canadian dividend stocks? I am not. I had bought, I think it was Enbridge at one time. And when I got my dividend and they had taken 25% out for withholding, I said, you know what? I'm done with this. I'm only going to buy stocks that don't take a tax out when they pay it to me. So I tend to not invest in, it doesn't matter if it's Canadian or wherever. If there is a tax that gets withheld, I tend to not pay much attention to them. So, yep. Kingsford charcoal. Dresch says it's more important that the bleach and the ranch might get mixed up than it is the charcoal and the bleach. So, Healthcare Corporation of America. Dresch says he's not sure how he feels about for-profit hospitals. So, yeah. You mean like from an ethical perspective, Dresch? Is that what you mean? Or whether they financially have a good business model? Oh, I've gone over tonight, but that's okay. We're having fun. I'm going to pick maybe one or two more. All right, so we've got DeHobo. I think I know who this is. This is my buddy who is probably still stuck in the snowbound region that I talked about earlier. So ETF called GOIQ, and then you also mentioned the GPIQ. So let's take a look, man. There we go. GOIQ. Oh. Maybe it was GPIQ. I see. It was one letter off, man. GPIQ. Goldman Sachs, NASDAQ 100 Premium Income ETF. So that would follow the NASDAQ. But wow, what a dividend yield. That's incredible. 9.9%. It is not rated by Simply Safe Dividends. That just means they don't follow it. It doesn't mean anything. Oh, it's been around so short a time. Looks like 2023. So a couple of years. And but they got quite an interesting payout. Let's take a look at what their chart looks like. GPIQ. Let's look at the 5-year. Yeah, it looks like it's going to follow the NASDAQ pretty well. But, the dividend looks very attractive too, Doug. So maybe I shouldn't have used your name. Anyway. But yeah, I think, it looks pretty attractive to me. And it's an ETF, so you automatically get your diversification. It's got NVIDIA, Microsoft, Apple, Broadcom, Amazon, Tesla, Meta, the two Googles, Netflix. So, it's not like it's investing in stocks that are going to go away anytime soon. But it does have a high volatility rate because it will follow the NASDAQ. So just keep that in mind. If you have a little bit of queasy stomach when your stocks go up and down, then you might struggle with that. So, but it looks good to me, man. All right. Well, guys, it is 9:11. I can't believe that we have gone an hour and 11 minutes on this, but it's been great to see you guys. Okay, one more for Robin. Enbridge for OKA, and I think that's Let me just look at that real quick before I make a fool of myself. Oni oak or one oak or whatever it's called. Yeah, one oak. I always called it Oni oak, and then somebody corrected me that it's one oak. So, but it's okie doke. uh, I don't know too much about Oni oak or sorry, one oak. I keep doing that because that's what I used to call it. Whoops, that's not it. Yeah, it's got a borderline safe dividends, but I think One Oak is a decent company. I have looked at it before. It's not like top of mind for me at the moment, but I don't see anything that, I don't see anything that is concerning about One Oak at all. So I think trading Enbridge for One Oak is not a bad idea. Those are my thoughts. So anyway, guys, it has been an hour and 13 minutes. Can you believe I could talk that long? Anyway, guys, I'm going to go deliver some honey tomorrow. I'll be thinking about you guys the whole time. But no, I'm just kidding. I'll be having a great time. So hope you guys have a great week and hope the markets do well for you. But other than that, I will catch you on the next one. You guys have a great week.